Good morning, Paul. Today is Wednesday, May 17th, 2017. And what you see here on my computer is New York time. It says 11:33 a.m. and over here in this clock. Real fast. This here is a portion of my files for my trading. Over here you're seeing February, March, April. If you go into any of these months, you will see a folder for each specific day. If you remember, recently I told you about the 4,100% return I called on Freeport-McMoRan right here. I don't record a video every day anymore. I did that for over 5 years. I stopped around February, and what I do now is I take photographs, pictures, so I do a sequence of an entire trading day. And so I identify setups, and then I take pictures, and then I do my studies like this. For instance, this is that incredible return on Freeport-McMoRan. Entry over here on the 24th, and then take a look at how it resolved all the way to 41%, and then the price pulled back. This is the price of the option. The 12.5 calls, expiration April week 4 or April the 28th. So this is the actual options chart, but if you go and identify the actual setup is right here. This is an upside divergence on the hourly chart. That also goes together with an upside divergence on the daily. Take a look at how the price is bottoming at the same levels. Yet technically we have the indicator here much higher on the second bottom. And so this is an indication of a lot of upside pressure. And so when the time frame is below it, in this case, a time frame below the daily would be, in this case, the hourly, you have a pullback over here, and then you will have, when the time frames below the hourly turn to the upside, you will have a violent move to the upside. And so right around here on the 24th, you had the price coming back over here, almost wanting to retest the lows. And if you go take a look at a time frame underneath, in this case, the 5-minute chart, take a look at the 5-minute chart here on the 24th, how it exhausted the downside, and so it needs to upcycle. And so that gives you the understanding that this thing is going to slingshot to the upside. And if you go take a look at where the price is at, see the price is coming down over here below 1250. See the 1250 here? The price came below 1250, and so when this thing slingshots to the upside, it's going to put the 1250 calls well in the money. See, take a look at how on the slingshot to the upside, the price comes up over here, so it eclipses the 1250s to the upside. We passed 13, so that at this point over here, those options are 50 cents in the money, and then it goes above 1330. So at this point, these options that were on our entry out of the money are now at the top over here, 80 cents in the money. For a stock that's worth $12, that's huge. That's really, really big. Now, if you go to even the lower time frames over here, see over here we have a 5-minute chart, and this is that price retest. It didn't quite retest the lows, but it came very close. And you understand when you're looking at this thing like this, all broken up like this, that means that the down cycle is ending, and the upside is coming up. Over here, we see the support to the upside coming in on the 1-minute chart, and so this thing resolves violently to the upside here, and then it comes back down here in the early hours of the 25th, and then it explodes to the upside. If you see, take a look at how the 1-minute chart here, this is the 1-minute chart, and this is 4 o'clock the previous day on the 24th, and this is the very beginning of the 25th. Take a look at how the price comes here, comes up, pulls back a little bit, and then it continues. And as it continues, it starts building a negative divergence, and so this is your indication that the move is exhausting, and then you're going to have a pullback. Take a look at how, if you go take a look at the long-term trend, the price pulled back, and then it wants to go back up. But for this trade, the move is over, and you execute an exit. In this case, either 3,750% or 41%, 4,100% if your timing is correct. So I just wanted to show you that because I did send you a text about this particular move. So that happened towards the end of April. This is my folder for the 25th. And over here, I follow very closely these 20 stocks. And so each one of them has a sequence of photographs where you can just pull up and see what was going on that particular day. So with that said, now you understand a little bit of my structure here. Each one of these days is a working day, and you can pull in and you can see my files on each individual stock. So I'm looking at all of them. So that is April. Let's go back over here. So that was April, and now we're on May, and I have May outside over here without a month folder because I'm working on this month. And so let me take you to Tuesday, yesterday. This is Tuesday, and we are looking at SPY, okay? And so over here, I have virtual trade day 1. Now, over here, I'm going to show you, before I show you the actual options chart, let's go to the actual stock chart. And the best way to start an analysis is by looking at this setup, which is the 15-minute, the hourly, the daily, and the weekly, because over here you have a nice overall picture of what's actually going on. You can see the long-term trend, you can see the weakening of the long-term trend and how there's a pattern appearing underneath it, and then you finesse it with the hourly, and finally the 15. I send you a picture on your phone of this particular setup, the 15-minute chart. If you pull up your phone and you see this is the divergence and this is the price stopping higher, and take a look at how the indicator is much lower in here. And so what's the context of this setup? Well, the context of this setup is that we have a weekly negative divergence right here. Take a look at how the price is topping at the same levels and actually a little higher on the second top. Yet technically we are down here. So this is implying a lot of downside pressure. Now the time frame underneath, the daily here, its upcycle had already exhausted its force and it's now already broken. And you have in here an hourly chart where the hourly had already turned because of this 15-minute pattern. And so I call this one over here, and that one, I was looking at the 240 puts. That's the text that I sent you. Or the 240.50 puts right here. Because we eclipsed the 240.50, so at this point, during the early hours of the 16th, right here, which is yesterday, we are topping above 240 and 50, right? Take a look at it. This is the setup on the 15. And then take a look at how the 5-minute, as this is happening, is running out of steam, and it is also diverging. And so this thing wants to come down really hard. Take a look at the 1-minute chart, how this is the early hours, and take a look at how this thing is stopping, and it has already a negative divergence. And so over here, the 240.50s entry on this talon pullback right around here, just around 10 o'clock. And if I show you the 240.50 puts, that's that talon pullback entry here, and then it went over here. I sent you a text. I think I told you at the time when I sent you the text at 75%, it made 80% on this one right here. So you buy those options at 62 cents and you sell them at $1.12 right around here, and that's done. Now, why? Because I understand at this point that there's going to be a pullback. And take a look at how these options go down here. So if you don't pull out, you lose this return. Now, as this is happening, see, you're betting on the drop, and then you have this pullback. That's why this options chart goes up and then down when the price goes up. You're gonna get a little confused about this, but just pay attention to the return. And the reason for this return is because of this particular setup on the 15-minute chart right here within this context that I told you. So that was that trade, and that ended with an 80% return. That's it. And then you are expecting, when you understand the dynamic of how this thing moves, a pullback. And it does that. It pulled back. So yesterday, I'm looking at this pullback, and I'm saying to myself, this thing is going to come back down again. I even told Alex during the day, the 240 puts, see, we traded the 240.50s, that's done, and the price pulls back above the 240. So now the 240 puts are out of the money when the price is above 240.25. The 240s are out of the money. And so my expectation at this particular point is for the price to drop. Okay? And so if I finesse this thing, I'm looking at an entry right around this area. Either here, over here, as I understand that the 5-minute is coming to an end. And if you miss that opportunity, the price comes back up over here. This is another opportunity. But my entry is somewhere in this area. I understand that. Take a look at how the 1-minute is already diverging to the downside. And the up cycle of the 5 here is already tired right here. See? And so right around this area, right around noonish, between noon and 1, I go for my entry. And so we're looking at, again at the 240 puts right here. What's my entry? 1238. Now, I want you to pay specific attention to this photograph, okay? This is very important Because take a look at the timestamp. It is 12:38 when I'm doing my marking. And by the time I took the photograph, the price already started tracking up a little bit over here, you can see. And the timestamp over here is 12:42 and almost 40 seconds. That's the time when this photograph was taken. There's no cheating. There's no doctoring. There's no photoshopping anything. This photograph was taken in real time. Take a look at the timestamp over here, 12:42. It says here yesterday, meaning today we're on the 17th. It was taken yesterday on the 16th. If I go back over here, we're working on my folder. Look, let me go back over here, trading. The 16th right here, this is my folder for the 16th. If I do this, you can see some of my notes that I put in here. I put SLW changed to WPM because the sticker changed its name yesterday. And then virtual trade. That means that I'm trading virtually right here. So this is virtual trade day one. I put day one because when I enter this towards the middle of the day, I understand that this is not going to resolve until tomorrow. And so day one, that means that I'm going to be on this trade overnight. And today would be day two. So this is happening at this particular time. I want you to see the timestamp. This is very important because this is me telling you in real time when this is happening. This is irrefutable proof that when I took this photograph, this was at the time this event was taking place. Take a look at the price of these options. 50 cents when I marked them over here. They're already 51 cents by the time the photograph is taken. Now take a look at the timestamp over here, 12:42 p.m., which is consistent with the clock in here, okay? Now, if I pull up over here this, and I go get info, if you take a look at this thing here, this thing, if I'm not mistaken, gives you a timestamp of the moment when this picture was created. It was created yesterday at 12:42 p.m. Every one of these photographs that I take has a timestamp. If I go back up over here, let's see here, let me go to May the 3rd. Let me go to Facebook. And here, this picture, what's the timestamp? May 3rd, 2017 at 8:37 p.m. That means that I took this picture at 8:37 p.m. That night. I take a picture of the market. I take a look at the market throughout the day, but I take my pictures of that particular ticker at night to have the activity of the entire day. So this is a picture for the 3rd. And this is what happened throughout the entire trading day. And so you can see the timestamp over here. I just want to make sure that you see that there's no cheating in here. See, created May 3rd, 2017 at 8:37 p.m. Okay, so if we go back up over here to Tuesday, and we're on this trade, this is that same timestamp. And it says when this file was created, yesterday at 12:42 p.m. Again, New York time. Okay. Now, these pictures here, take a look at the timestamp of these pictures. These pictures were taken at 4:28 p.m. That means that I took these pictures, the market closes at 4 New York time. I took these pictures 28 minutes after the market closed. Okay. Again, because I take a picture at the end of the market, so I have the entire history of what happened that trading day. Okay, hopefully I'm not losing you with this much detail, but it is necessary to flesh out the entirety of this system so that you see that there's no cheating, there's no doctoring, there's no photoshopping. I'm not making these things up. I am taking a picture here as it happened. So there's my picture number one. And then I take another picture at 4:37 p.m. I took a picture over here after I took a picture of the entire market. So take a look at the sequence. That's my entry, virtual entry at 12:38 p.m. I write that text myself. I make my markings. I take a picture of what this thing looks like at the time. And then here it is. Take a look at how, as the day progresses, we entered at 12:38 p.m. As the day progresses, we are at 36% return. As the price is starting to move in the direction of our expectation. Now, we have a pullback towards the end of the day, and we come back down and retest lows at 52 cents when our entry is at 50. So we almost went back to our entry point. Was I concerned about this at this point? Absolutely not. Why not? Because I have my context over here. My context says that there is going to be a deeper drop because technically this thing calls for it. Now I'm going to show you another chart over here, which is the 4-hour, the 2-hour. Here we have the hourly and the 30-minute. Now take a look at the 4-hour. The 4-hour is in huge divergence territory. See how the price topped out over here, but technically we're down here. On the 2-hour, we have the same thing. See, take a look at this. When we had this retest over here, we pull back. then we have a continuation of the trend. We top out over here, and we are technically lower. The price retest higher, but we are technically lower. On the hourly, same thing. Take a look at how we are testing lower than the previous technical top, but the price is higher. This is implying downside pressure. Take a look at how on the 30-minute chart, we come over here to a point of exhaustion. This is that 15-minute pattern that I showed you that made 80%. So that was the beginning of this drop. And if you go to the 15-minute chart, that's that topping. We pull back, we drop 80%, then we pull back. We understand that the price is going to pull back over here. I don't want to tell you why because it's going to get too confusing. But suffice it to say that I just know that it's going to pull back. It's all a matter of understanding trending and channel regressions, which that's another kind of worms that I'm not going to open right now. So that's why you pull out of that trade at 80%. You let the price pull back. We're technically lower. The price starts resolving. This is our point of entry around 12:30 something. Then it pulls back. Then technically we exhaust our downside. So that's why the price comes back up again, which affects our options in a negative way. That's why these options came back down again. But that doesn't mean that they're not going to work. So that's how we ended the trading day yesterday. Okay. Now, if we go back over here, this is yesterday, and now we are here today, Wednesday. So let's open that. And here we are on SPY Virtual Trade Day 2. And right now, I have over here just the pictures of the actual trade as it's going, but the pictures of the actual stock I have not taken yet, because remember I told you I take those at the end of the day. We're 4 hours away from the close of the market. And so I carry over on this folder the pictures from yesterday, which were picture number 1 and picture number 2. And you can see the date stamps. They remain. I just copied those files over, and I have copies of those files here. That's the date stamp at 12:42 p.m. And then the next one at 4:37 p.m. And then today in the morning, when I exploded on your phone sending you text, I'm taking pictures as this thing is unfolding. Take a look at the first picture at 9:36 a.m. The market opens at 9:30 in New York. So at 9:36 a.m. I take a picture. So let's take a look at the sequence. So that's our entry yesterday. Then I take a picture at the end of the market. We had the regression that I talked about. And here's the opening today. Boom! This thing explodes to the upside. And at the opening, we're at 286%. And I sent you a text immediately. Then I take another picture at 9:57. I know that there's going to be a little regression. Then there's going to be a continuation, 360%. Then at 10:40 a.m., I take another picture. And at this particular point, I say, I'm out. I'm out right here. And you know what? When I did this, because I'm so excited about it, I forgot to timestamp over here, because I usually put my entry, virtual entry at 12:38 p.m. And I should have put over here virtual exit at 10:40. At 10:40, I decided to exit right here. I'm going to tell you why I decided to exit over here in a little bit. And I'm going to give you a technical explanation of why. Because I understand that the price is going to pull back over here. There's a lot of force of the trend to the downside at this point, and there's a possibility that it can continue, and we go from 444% higher. But a regression at this point is in the cards, because take a look at how technically we are already diverging to the downside. Take a look at how the price is stopping higher, but technically we're down here. So this calls for a regression. Okay. Now this is looking at a low time frame. Here's another picture. Take a look at how this is my exit right here at 10:40, and then the price regressed here. That's why I said I'm out. Then the price continued for a 528%. But I decided at this point, you know what? This is good. The price is starting to find its tops. We're going to find stability throughout the day, and we might even regress. And so why give this money back? Now, is there a chance for more gains? Yes. But the risk increases exponentially. Why risk something that has this much positive already built into it, 444%? It's an amazing return. And so that's why I decided to pull out. Okay, now I'm going to take you to a live chart. This is a live chart of what's actually happening right now. This is live. Take a look at how the clock over here on the chart is ticking. And so is my clock over here. Okay, it's 11:58 New York time. Now, take a look at this. I'm going to open the 4-hour chart. Remember this 4-hour chart that I showed you before it had this much momentum? Right here, if I go here, and I go here, that's that 4-hour chart right here. So if we go here, and I show you, take a look at how I know that the price was going to come back down violently. And that it did. Now, as the price comes down like this, let me show you the lower time frames. See, this is the opening, this is the drop. I understand, as a matter of fact, let me go here to the 1 and the 5. I understand that the 1 minute is going to start creating a support to the upside. Take a look at how this has a lot of upside building up. And so that means that this thing is going to pull back and the 5 minute finally turn. This is why I decided to get out of that trade at that particular point, because this thing pulls back with great force. Let me show you this. Here's that options chart live. This is our exit. This is the top, and take a look at the regression. I understand that it's going to regress because of all of this upside. Number one. Number two, I understand that it's going to regress for another reason, and that is channel regressions. I cannot get into explaining to you channel regressions with a lot of detail right now, but suffice it to say that the market moves in regressions of a channel following a trend. But for instance, take a look at this weekly. See the trend to the upside here? See, as I draw this line over here, take a look at how the pullbacks hit the channel regression line pretty accurately. And if I draw a line on top, the price tops touch the channel regression line pretty accurately. Well, as the price reaches a new high, it's following that pattern. Now, the channel regression theory is not perfect. It is a guideline. And you finesse it by understanding technical analysis using an indicator like the MACD, the moving average convergence divergence, that will tell you when there's implied weakness on the trend. And so we have a negative divergence at a weekly level here, at the same time that the upcycle of the daily has already been compromised. If you take a look at, if we draw a channel regression line over here on the daily, take a look at how this topping touches this uptrend line. This is the top of the channel. And then we have a bottoming of the channel. So as the price drops in here, the chance of a regression of the channel on the channel increases drastically. And if there's a technical support underneath, then the more that is. See, take a look at the technical support underneath. The 5 minute even created an upside divergence over here. Now, these are not tradable moves. You just call them because you understand the dynamic of the movement. And based on that knowledge, you can make an educated decision to pull out of an investment because you understand that the risk is increasing against you and the likelihood of a pullback against what you are trading is really big. And so that's the end of the trade. The violent move comes to an end, and then more than likely we're going to see a pullback over here. For this analysis, I need to open up my larger context and analyze and see what's going on. What's going on over here is we have a technical bottoming on the 15, so this is starting to already build some support to put a stop on this hourly. And so right now the price can find its bottoms and sustainability over here, and it can meander back and forth over here. I think what we're going to see over here, forecasting what's going to happen in the next 2 or 3 days, is we're going to see some support, and we're going to see a pullback, and it is very possible that we're going to see another continuation to the downside. This is pure speculation at this point. This is me just calling a very likely scenario, but at this point, this is not a trade. This is nothing other than analysis, and we continue to analyze this thing for the next hours and days until we see a pattern that tells us unequivocally that there's going to be a continuation to the downside. If that presents itself, then that becomes a tradable opportunity. But at this point, nothing. At this point, we just understand that the price is going to take a break, and there's a huge likelihood of a pullback on this established trend. End of story. I wanted to make this video a little shorter. I get carried away, but there you have it. There you have it. I just wanted to really flesh out what this was like and how it happened and how I come up with these decisions. I guess, you know, when you've been doing this for 5.5 years like I have, it's really hard for somebody that is not immersed in this type of day trading, to follow along the ramblings of an actual trader. And so I usually lose my crowd very, very fast. Hopefully this makes sense to you. Suffice it to say that I'm getting insanely good at this. And in the next setup, I think I'm going to go in with real cash. And this thing is going to get ridiculously interesting. Stay tuned. Don't lose faith, because I'm in this thing forever. Catch you soon.